Hi everyone, very good evening. I am Manat Sharma, ESI faculty and current affairs faculty over here at Oliveboard. And from today, we are going to start off with government schemes. So we are going to cover ministry wise, we are going to cover a few schemes, a few important schemes, and we are also going to see the important provisions of the scheme so that you can be well prepared for your exam. I hope my audio and video is clear, and through this session we'll be able to understand which are the important schemes for your examination point of view, and secondly what are the important features in each scheme, and that is how we are going to cover up. We are going to go ministry wise. Today we are going to start with Ministry of Finance. Okay, today we are going to start off with Ministry of Finance. Good evening, Sona. Is my audio video clear? Okay, what about others? I see more of you attending the class. So we are going to start off with government schemes today, and we are going to cover the schemes ministry wise. We are going to cover the important details of each and every scheme so that you can be well prepared for your exam. Okay. So let's continue. Let's start with our session. So today is Ministry of Finance, and it is part 1. So we're going to cover some schemes related to Ministry of Finance today, and some of the schemes will be covered tomorrow. Okay. So let's start off with the session. Okay. So the first scheme is Pradhan Mantri Jeevan Jyoti Bima Yojana. So whenever there's this word called Bima, Bima is related to insurance. Never forget that. Okay, so Bima is related to insurance, and insurance, very easy how to remember the ministry. Insurance is related to your finance sector. So Ministry of Finance is the nodal ministry which brought up this Pradhan Mantri Jeevan Jyoti Bima Yojana. So Bima for insurance and Jeevan Jyoti for life. Jeevan is life. So this is a life insurance. This scheme or this yojana is for providing life insurance. Okay, that is what you have to remember. When was this launched? Launch year is very important. It was launched in 2015. Ministry of Finance, and it is a central sector scheme. So does anyone know the difference between a central sector scheme and a centrally sponsored scheme? What is the difference between these two, centrally sponsored scheme and central sector scheme? I have also explained this in one of the classes, so if you've attended, you might know. I think in budget we had discussed and I had explained. So anyone who knows the difference between central sector scheme and centrally sponsored scheme? These are a few terms which you should be knowing. These are a few terms, wherein we get a little confused, but we need to know what these terms are. Any idea, anyone? What do you mean by central sector scheme? Or what do you mean by centrally sponsored scheme? Anyone? I see many students attending the class. Anyone? Does anyone have an idea? Sona is saying in sponsored scheme, the share is differentiated between central and state government. Okay. And what about central sector scheme? (90:10), 10:90. Okay. What about others? Anyone else who knows the difference between a central sector scheme and a centrally sponsored scheme? So the basic difference between the two is when we talk about central sector scheme, it is entirely funded by the central government. It is entirely funded by the central government. But when we talk about centrally sponsored scheme, this is maximum. It is sponsored by the central government, but the state government also has a share. State government will also have its share, will also contribute. That is what is the difference between a central sector scheme and centrally sponsored scheme. So remember this difference. In many schemes it will be central sector scheme. So wherever central sector scheme is written, that means it is entirely funded by the central government, and wherever centrally sponsored scheme is written, that is maximum. It is sponsored by the central government, but state government also has a share. State government will also have to provide some fund. Okay, so what did I teach you? That it is related to life insurance, Jeevan Jyoti life insurance coverage and financial security to individuals in India, especially the economically vulnerable segments of the society. So the focus is more on the marginalized sections, on the vulnerable segments of the society. Okay. So Sona said in central sector scheme, it is entirely funded by the central government. Absolutely correct. Good, Sona. So you remember it. Okay, so it is a life insurance scheme. We need to know the eligibility also. So people or the people between the age group of 18 to 50 years, they are eligible to enroll in this scheme. So which age group? It is 18 to 50 years. So in your questions, in your MCQ, such kind of questions can be asked. That is why you need to remember it. Okay. Then eligible individuals must have either an individual bank account or a post office account. So you are supposed to have a post office account or a bank account. And what is the coverage period? So if you are joining after 50 years of age, or before, if you are joining before turning 50 years of old, then you can continue to have life risk covered under this scheme till the age of 55 years. So if you enroll in this scheme when you're less than 50 years, say you're 40 years, you're 30 years, so you can even extend this scheme till 55 years. You can extend this for 5 years. 5 years extension is allowed. Okay, and you have to pay some regular payment for this life insurance. Regular premium has to be paid. Okay, so what are the features of this scheme? It is going to provide a life cover of rupees 2 lakh if there is a death due to any reason. So when there is a death, how much money do you get? How much life insurance cover do you get? You get of 2 lakh. That you have. This also you have to remember. Okay, and in case of death, so after 30 days of enrollment. So for example, you have taken up a scheme right now, and suppose within 20 days of taking that scheme, you have died within 20 days. Then you will not get that. You will not be able to take that claim. Only when 30 days are over, after that you can get the claim. That you have to remember. Okay. So the life cover which is provided by Jeevan Jyoti Bima Yojana, it is for 1 year period from 1st June to 31st May of each year. So it is renewable. It is usually for 1 year, but it can be renewed every year. It can be renewed every year. And what is the per annum premium? 436 rupees per annum that you have to pay. That is the premium amount which can be auto debited in one installment. So it can be auto debited from your account. Okay. So it is offered by LIC, Life Insurance Corporation. So remember this also, Life Insurance Corporation, presents this scheme. It is offered by Life Insurance Corporation and other life insurance companies that are willing to offer this product on similar terms. So other life insurance companies can also, can offer this scheme. But majorly it is the LIC which provides this scheme. So what all do you have to remember from this? The launch year, which is 2015, which Ministry of Finance. It is a central sector scheme. It provides life insurance coverage. Which age group? 18 to 50 years. And it can be extended till 55 years. If you have taken up that scheme before 50 years of age, you have to have a bank account. You have to pay premium of how much amount? 436 per annum, which can be auto debited. And after, in case of death, how much life cover is provided? 2 lakh life cover is provided. And if, after death, only after first 30 days of enrollment, after that only the money can be claimed. Okay. So I hope you have understood Pradhan Mantri Jeevan Jyoti Bima Yojana. I hope it is clear to you. So whatever key points that I have told you, just remember it. Okay. Just remember it. Then next move on to Pradhan Mantri Suraksha Bima Yojana. Again, Bima which is related to your insurance. Okay. And Suraksha, that means protection. So protection against what? Accidents. That is how you can remember. Again, when was this launched? 2015. Similar to Pradhan Mantri Jeevan Jyoti Bima Yojana. Similar to that. Again, Ministry of Finance. This is also a central sector scheme. So these three things are same from same in JJBY also, and in Suraksha Bima Yojana also. This is for accident insurance, that was for life insurance. So this is for the poor, accident insurance for the poor, and so that their family can have financial protection if there is any mishap which has happened. What is the eligibility? 18 to 70 years. What was the eligibility in case of Pradhan Mantri Jeevan Jyoti Bima Yojana? It was 18 to 50 years, which could have been extended to 55 years. But in case of your Suraksha Bima Yojana, it is 18 to 70 years. Do not forget this. So if you remember it like this, if you try to differentiate it like this, then you will be able to better learn these things. Okay, and again, you have to have an individual bank account or a post office account. What is the coverage? 2 lakh for accidental death and 1 lakh for partial disability. So for example, you have met with an accident. In case after that accident, the person has died. In that case, you are going to get a cover of 2 lakh rupees. But in other case, if for example due to an accident you have partial disability, for example, you have a broken leg, or you have any kind of, if your hand is broken, or any kind of disability because of the accident, in that case you are going to get 1 lakh rupees. So this division you have to remember. Direct MCQ can be asked from here. And what is the premium over here? 20 per year, rupees 20 per year, which is very less. What was the premium in JJBY? It was 436 per annum. So 436 rupees per annum, and in this case it is 20 per annum, 20 rupees per annum. So what is the eligibility? 18 to 70 years, we've seen it. This is also annual, from 1st June to 31st May. It is also renewable. This can also be renewed. Then KYC is done through your Aadhaar card. And the premium will also be cut through auto debit facility. What is auto debit facility? Who's going to tell me? What do you mean by auto debit facility? Anyone? What is the meaning of auto debit facility? So auto debit facility was in JJBY also and in Suraksha Bima Yojana also. Tell me, what do you mean by auto debit? Write in the comment section. So Sona is saying directly debited from account. Okay, premium will be paid or debited from the account automatically. Absolutely correct. Correct. Prem Sona, you're correct. So auto debit basically is that when you link your account with it, then your money will be automatically debited. Okay, in one installment. And this is offered by public sector general insurance companies. And if there's any other partnership. So major public sector general insurance companies. This is the major. And what was the major insurance corporation in case of Jeevan Jyoti Bima Yojana? It was LIC. Okay, and here it is public sector general insurance companies. Okay. So I hope Suraksha Bima Yojana is clear. So I think these both schemes were very easy. I think you might have learned it right now only by attending it. So 2015 Ministry of Finance central sector scheme. These things are same. This is for life insurance. That is for accidental insurance. This is for 18 to 50 years, and your SBY is for 18 to 70 years. This can be extended beyond 50 years up to 55 years. There's nothing in that case. In both the things, the auto debit facility is there. In this case of Jeevan Jyoti Bima Yojana, 2 lakh in case of death. In that case, in case of death, 2 lakh. But in case of partial disability, 1 lakh. Okay. And premium in this case is 436 per annum, and in SBY is 20 per annum. Okay? Easy. Now let's move on to sovereign gold bond scheme. So what do you mean by gold bond? Anyone? What do you mean by gold bond? And what is the meaning of sovereign? So there are two terms here. Let's understand first the meaning of these terms, and then we'll move on to the scheme. So what do you mean by gold bond, and what do you mean by sovereign? Anyone? 2015 Prem. It was launched in 2015. Both the PM Suraksha Bima Yojana and your Jeevan Jyoti Bima Yojana, both of them were launched in 2015. Okay. Now, what do you mean by sovereign? What is this word called sovereign? What does this mean? And what do you mean by gold bond? Anyone? Himanshu is saying indigenous. Sovereign means independent. Okay. And what about gold bond? So sovereign otherwise means independent, but when we use the word sovereign, it means we are talking about that it is backed by the government. It is backed by the government. So this is a this is a very safe security. So if you invest in any security wherein the word sovereign is mentioned, that means it is backed by the government. So there can never be a failure or there can never be a default in this case. That means if you are investing, you will surely get your money back. Your money will not get wasted. There's not going to be any default in this case. That is what is meant by sovereign. So wherever you see this word sovereign with any security, that is a very safe security and you can invest in that. That is backed by the government. Your money is not going to be wasted. It is a risk-free investment, you can say. Okay. And gold bond. What is gold bond now? Anyone? What is gold bond? So I hope you understood the meaning of sovereign. So Prem is saying gold bonds are instruments against the gold as underlying asset. Absolutely correct. So when we talk about a bond, bond is, you can see it as a paper. It is kind of a security only. It is like a paper wherein the value of gold is written. Value of gold is written. So physical gold is not present. It is an underlying asset. It gets its value from the actual gold, from the actual physical asset. So when you buy a gold bond, when you buy that paper, when you buy that bond, that means you're not buying physical gold. You are just buying this bond which is tied to the value of an underlying asset, which is tied to the value of gold. That is what is called gold bond. So why was this introduced? It was basically introduced so that people can buy these gold bonds, so that money can be generated, and rather than accumulating physical gold, you buy these bonds. Okay, so when was this launched? It was launched in again 2015, Ministry of Finance. It was launched. This was also launched in 2015. So who issues this sovereign? Who issues sovereign bonds? So who issues sovereign gold bonds? The Reserve Bank of India on behalf of the government. Okay, so RBI on behalf of the government issues these bonds. So it is to mobilize the gold held by households and institutions in the country. Okay, so we're going to collect gold from the people, and rather than selling that gold, or rather than selling that physical gold, what are we going to do? We are going to sell gold bonds. We are going to sell that paper as a security. So who are eligible to buy these bonds? Resident Indian entities, including individuals, Hindu undivided families, trusts, universities, charitable institutions. All these are eligible to buy these gold bonds. And KYC norms, they are very similar to voter ID, Aadhaar card, PAN card, passport card. So it has similar KYC norms. Okay, okay. So bonds are denominated in grams of gold. So basic unit is going to be 1 gram of gold, and bonds are going to accordingly be denominated. The tenure of the bond is 8 years. So the bond, the maturity period is 8 years, but you have an exit option in the 5th year, in the 6th year, and the 7th year. So you can even opt out. So for 5 years minimum, you have to take up that bond. But after the 5th year, if you want to withdraw, you can withdraw. Or if you want to withdraw after the 6th year, then you can do so. If you want to withdraw after the 7th year, then also you can do. Okay. And minimum investment is 1 gram of gold. So remember this also. Maximum subscription is 4 kg of for individuals, 4 kg for Hindu undivided families, and 20 kg for trusts and similar entities. So it is 1 gram. It is the minimum is 1 gram, but maximum is 4 kg for individuals also, and for Hindu undivided families also, and 20 kg for trusts and similar kind of entities. So this also you have to remember, that what is the minimum amount and what is the maximum limit for different entities. Okay, and they get a fixed interest rate of 2.50 per annum. So it is paid semi-annually, that is half yearly. Okay, and there is a fixed interest rate of 2.50%. Remember this interest rate. Okay, and if you are an online applicant who pay digitally, then you get a discount of rupees 50 per gram. So if you're paying online, if you're paying through online transaction, then you have a discount of rupees 50 per gram. Okay, and payments through cash can be made up to 20,000. Okay, and otherwise it can be made to demand draft, check, electronic banking, any. Okay, so this was about your gold bond scheme. Then interest on gold bonds is taxable as per provisions of the Income Tax Act. So interest on gold bond is taxable, but capital gains tax is exempted. Okay, capital gains tax is exempted, but interest on these gold bonds, that is taxable, according to the provisions of Income Tax Act. Okay, and how do and during your maturity, how is it decided? How is it decided that what is going to be the value of gold? How is the value of gold going to be decided? So it will be decided on the closing price. It will be the average closing price of 999 purity gold for the previous 3 working days. So for example, today my this gold bond is being matured, so the value of that gold will be decided in the through the average of the previous 3 working days. We're going to find the average of the price of 999 purity gold. Okay, and these bonds can also be used as collateral for loans. So it can be used as collateral also. Okay, these can become tradable on the stock exchanges also within a fortnight of issuance. So after after 2 weeks, after 14 days, these bonds can be tradable also on the stock exchange. Okay, and if we see the recent amendment, this is the recent amendment. Union government in budget 24-25 announced a reduction of import duty on gold. So import duty on gold was reduced from 15% to 6%. So this is what you have to remember. Is this scheme clear? Is the sovereign gold bond scheme clear? Is it clear? Please let me know. So we've done 3 schemes till now. We've done the sovereign gold bond scheme and we've done 2 insurance schemes. Any doubt till here, please let me know in the comment section. Only then we're going to move forward. Clear? Repeat what, Sunil? Repeat what? The entire scheme. So I'll just briefly repeat it. So a sovereign gold bond scheme, it was launched in 2015. Again, Ministry of Finance. It is issued by RBI on behalf of the government. Okay, and these bonds, what is a bond basically? These gold bonds are financial instruments. So it is like a paper. You can see it is like a paper. So you're going to buy that paper, but the value is tied to an underlying asset like gold. So it does not have its real value. It is tied to the value of gold. So when you buy bonds, you don't need to buy physical assets. So you don't need to buy physical gold. Rather, you are buying that bond, and when you buy that bond, then you are going to get a fixed rate of interest. What is that fixed rate of interest? It is 2.50 per annum. This 2.50% per annum is the fixed rate of interest that you get if you buy that bond. And you can pay if you pay that the installment of the premium digitally, electronically. If you pay it, then you receive 50 rupees discount. And the minimum investment that you can make is 1 gram of gold, and maximum that you can make is 4 kilogram for individuals, 4 kilogram for Hindu undivided families, and 20 kg for trusts and similar trusts and similar entities. And what is the period? What is the tenure of that bond? For what is the maturity period? It is 8 years, but you can take out your money after 5th year or the 6th year or the 7th year. That flexibility has been provided. Okay, and it is the capital gains tax is exempted in this case. Capital gains tax is exempted if you buy this. It is tradable on stock exchange. And how is the value decided? For example, today your gold it is going to be matured. For example, your gold bond is going to be matured today. So in the last 3 working days, whatever was the price of gold in those last 3 days, for example, it was 60,000, 60,000 in this previous third year, it was 70,000 over here, and it was 75,000 here. So we're going to find an average, and whatever was the amount through that average, that is going to be the price of gold at the end. And then we saw a recent amendment wherein import duty on gold has been reduced from 15 to 6%. Clear, Sunil? Is it clear? What is a sovereign gold bond scheme? Sovereign is written because it is talking about the government, that it is backed by the government. So what you do is you buy that bond, you invest money in that bond, and at the end you get an interest of 2.50%. Okay, and what is the period? It is 8 years is the period, but you can take out your money after 5th, 6th, and 7th year. But for 5 years, it is you have to compulsorily keep it. Clear? Clear, Sunil? Clear, Sunil? It has been reduced from 15% to 6%, Prem. It has been reduced from 15% to 6%. And now, it is being decided that they might remove the sovereign gold bond scheme because it is becoming very heavy on the government. So this might be discontinued very soon. So there are talks that we are going to discontinue the sovereign gold bond scheme because it is creating a lot of burden on the government. A lot of burden is created on the government. A huge amount of interest has to be paid. So it is creating a burden on the exchequer. That is why mostly 99% the sovereign gold bond scheme is going to be discontinued. Okay. Then is your national pension system. This was launched in 2004. Now the year has been changed. So pay attention. Again, national pension system, it has been launched in the year 2004. Ministry is again Ministry of Finance. What is the implementing agency? PFRDA, which is a Pension Fund Regulatory and Development Authority. So if there's any scheme related to your pension, whether it's Atal Pension Yojana or National Pension System, Unified Pension System, or whatever, all that will be regulated or implemented by PFRDA because that is the sole regulatory authority. So it is your Pension Fund Regulatory and Development Authority. Okay. So this scheme allows for systemized savings during one's working year. So you can save during your working years. So it is going to promote financial discipline. That is what is the objective of the scheme. So who are the beneficiaries? Anyone who is between the age of 18 to 65 years. So any citizen of India, whether it's a resident or whether it's an NRI, if you are a citizen of India and you are between the age of 18 to 65 years, then you can avail the national pension system. So you have to remember these ages in your JJ BY Jeevan Jyoti Bima Yojana. It was from 18 to 50 years, extending to 55 years. In your Suraksha Bima Yojana, it was 18 to 70 years. And in case of your national pension system, it is 18 to 65 years. So do not forget these years. Okay. So NPS may, in case of your national pension system, you are going to be able to open 2 accounts. One is your tier 1 account and the second one is your tier 2 account. Tier 1 account is a pension account. So it is compulsory and it has restricted withdrawals. You cannot easily withdraw from here. You cannot easily withdraw your money from here, from the tier 1 account. So tier 1 is related to a pension account, and tier 2 is voluntary, whether you want to open or not. It is your savings account. It is a voluntary account, and you can take out money from this account. But to have a tier 2 account, you have to have a tier 1 account. So tier 1 account is compulsory. Tier 2 account is not compulsory. Tier 2 is actually voluntary in nature. So tier 1 is your pension account. So direct question can be asked this way. Tier 1 is your pension account and tier 2 is your voluntary savings account, you can say. So from here you can take out, you can withdraw money as per your convenience, but here you cannot withdraw money. Okay, you will get a unique number called PRAN. You get a unique number. If you have subscribed to this scheme, you are going to get a unique number called PRAN. Okay, and it will be maintained by Central Record Keeping Agency. So this number, this unique number, you will be getting. Like you have your Aadhaar card number, the same way you have your PRAN number in this case. Okay. So when you have to withdraw, upon your retirement, then at least 40% of the NPS corpus, it must be used to purchase a pension for life. So 40% of the NPS amount shall be used for pension for life from a life insurance company. Okay, and rest amount can be taken up as lump sum. So 40% you have to invest in any life insurance company where, after the maturity of this, whenever you get the money from retirement, 40% you have to invest in life insurance and the rest you can take as lump sum amount. Okay. So there are three models under the national pension system. One is the government model, then is the corporate model, and the all citizens model. So when we talk about the government model, this is mandatory for all central government employees. So all central government employees have to open up a account under the national pension system. This is not voluntary for them. So except for armed forces. So except for armed forces, all central government employees have to open up their account in NPS. Those who are recruited on or after 1st January 2004, for them, for those kind of central government employees, it has become compulsory. Then if we talk about the corporate model, then companies, they can choose to adopt NPS for their employees. So they have a choice. And in case of all citizens model, then all citizens who are aged between 18 to 65 years, they can voluntarily join NPS whether they want to or whether they do not want to. So this is open to individual regardless of their employment status. Okay, so remember these three models. First is your government model, second is your corporate model, and third is your all citizens model. In case of government model, all central government employees except for armed forces who have joined the service after 1st Jan 2004 or on 1st Jan 2004, they have to compulsorily open an account. But in case of the corporate model, the employers can choose to adopt NPS or not. And in case of all other citizens, if you are between the age of 18 to 65 years, it is up to you. It is voluntary. Okay. And enrollment, government employees enroll through nodal officers, corporate employees through employers, and other individuals through they can apply for it electronically also, or there are certain nodal officers through whom they can apply. Okay, so they have online access to their pension accounts also. So they have online access to their pension accounts, and if they switch between their jobs, then their NPS account will not get affected. So if you're even switching between jobs, that account is safe. Okay, and the subscribers, they can make partial withdrawals from this NPS tier 1 for specified purposes after contributing for at least 10 years. So from your tier 1 account, I told you that it is restricted account. So only after 10 years you can withdraw, that too also partial withdrawals. You cannot completely withdraw. And that too in special circumstances that you have to mention also that you want that. And there are tax benefits also if you invest some amount in your national pension system. If you save some amount through that, you have tax benefits also. So you can have deductions of up to rupees 1.50 lakh under section 80 CCD, and additional exemption of rupees 50,000 under 80 CCD 1B of this income tax act. So up to 2 lakhs. So up to 2 lakhs can be exempted from taxation if you invest in this national pension system. Is this clear? Is this clear? Any doubt? Good evening, Sheikh. Yes, I'll explain the models again. So under this national pension system, there are three models. Okay, there are three models. One is your government model. What is under the government model? So for the central government employees who have joined from 1st January 2004, all the central government employees who have joined on or after January 1st, 2004, it is compulsory for them to invest their money in national pension system. First model is your government model. When we talk about the corporate model, in that case, the companies, they can voluntarily choose whether the employees, the employer will choose whether the employees can contribute some amount to the NPS. Do they want to adopt NPS or not? And third is the all citizens model. Except for these corporate and government models, all other people, if they are aged between 18 to 65 years, they can open up their account under the national pension system, and that is completely voluntary in nature. So I hope you've understood the three models. Yes, tax exemption is allowed. Yes, tax is deductible. Tax exemption is there. Okay. So if you talk about the new tax regime, right now, yes, in that also it is deductible. Yes. Yes, Prem. I hope it's clear now. Any doubt, anyone? I hope you've understood this national pension system. I hope you've understood this. Clear? Okay. Prem, I hope you've understood. Any doubt? Then we'll move forward. Okay. So next is your Vivad Se Vishwas scheme 1. So there's another scheme related to with Vivad Se Vishwas. We have Vivad Se Vishwas scheme 2 also and 1 also. So don't get confused between the two. So this Vivad Se Vishwas scheme, it was launched in 2023. So do remember this year, Vivad Se Vishwas scheme 2023. It was launched in 2023 after, basically it was launched after, seeing the after effects of COVID. So it is again Ministry of Finance. It aimed at providing relief to MSMEs affected by the COVID-19. So Vivad Se Vishwas scheme 1, remember that it is for micro, small and medium enterprises. So in the budget, the definition for these MSMEs has been revised. So go through that as well. Please learn it. Direct question can be asked that what is the revised definition of micro, small and medium enterprises. So in this budget only it has been revised. So very important. So just go through it and just remember it. Write it down in your notes. Okay, don't forget it. Okay. So under Vivad Se Vishwas scheme, why was it launched? It was launched for MSMEs who were affected by COVID-19 to provide them relief. So ministries, they have been asked to refund performance security, bid security, liquidated damages deducted during the COVID-19 pandemic. So whatever amount, you don't need to remember all this in detail. So whatever amount had been deducted, whatever amount had been taken up from the MSMEs related to anything, that will be given them back. That will be provided, that will be refunded to them. It will be refunded to the MSMEs. Okay. Okay, so whatever money had been extracted during the COVID-19 pandemic from the MSMEs, that will be provided back, that will be refunded to the MSMEs. So which are eligible, what is the eligibility criteria? MSMEs, they must be registered as medium, small, micro, small, medium enterprises under the Ministry of MSME. So when you have to claim that relief, then you are supposed to be classified and you are supposed to be registered under the Ministry of MSME. So if you are a micro enterprise but you are not registered under the MSME ministry, if you're not registered under that, then you cannot take up that, you cannot claim that relief. Okay, contracts for goods and services with delivery or completion periods between 2020 and 2022. So who are eligible? Whoever have contracted for goods and services between this period, between 2020 to 2022, they are eligible for this relief. Okay, so it came into effect in 2023, and deadline for submitting your claim was 30th June 2023. Okay, so 17th April 2023, this was, it came into effect, and by June, you had to submit your claims. So it applies, this relief applies to all contracts for procurement of goods and services, and including all ministries, departments, attached subordinate offices, autonomous bodies, central public sector enterprises, central PSUs, financial institutions. So all these, if they are a part of the MSME sector, all the contracts that the MSMEs have taken up with these kind of ministries or these kind of departments, for trade in goods and services. So these contracts will be can be claimed. So if an MSME has had a contract for selling goods and services or anything to these departments, these ministries, departments, subordinate offices, autonomous bodies, public sector enterprises, financial institutions, if there's any contract that they have engaged in, so that relief can be taken up, that relief can be claimed through these contracts. And these claims are to be submitted through the government e-marketplace portal. So GEM portal, through this GEM portal, these claims can be you can claim for relief through the GEM portal. So what is this government e-marketplace portal? Anyone aware of this? Anyone aware of the government e-marketplace portal? Anyone aware of GEM portal? Anyone? Sona, Prem, Sunil, Sheikh? So all government departments has to procure through this portal. Yes. So if there's any government sector enterprise or any government department, if they want to procure anything, if they want to buy any goods and services from the private entities, from the private companies, they have to do it through this GEM portal only. So it ensures transparency, that through this online portal, the bidding is done through this online portal only. From the private enterprises, goods and services are brought. So the bidders can bid for the amount at which they can supply. Absolutely correct. So bidding happens at this. So what the government is going to provide a tender that we want this, we want these goods and services. Then the companies, they are going to state their quotations, and according they are going to bid that. And the lowest rate, the private player who offers the lowest rate, that company is going to get the contract. So that is how this government e-marketplace works. Okay, so through this GEM portal only, these claims are going to be processed. So is this Vivad Se Vishwas scheme 1 clear? Is the government e-marketplace portal clear to you? Is it clear? Because if this is clear, then we are going to move on to Vivad Se Vishwas scheme 2, which was announced in 23-24 union budget. So this is this is very different from the Vivad Se Vishwas scheme 1. Okay, so I hope you understood this scheme and what it is related to. So it is basically to provide relief to MSMEs, that you have to remember. Okay, so these are just the details, but what you have to remember is that this scheme was related to providing relief to the MSMEs, that too after COVID. Okay, then is Vivad Se Vishwas, the second part of it. It is a voluntary settlement scheme. So it is a voluntary settlement scheme to resolve any kind of dispute, any kind of contractual disputes which involve government agencies. So first was related to your relief for MSMEs, but the second one is for contractual disputes. So if there is any kind of dispute which is related to a government agency, that can be resolved through this scheme. So it is designed specifically for disputes where arbitral award is under challenge in a court. So what is arbitral award? What do you mean by arbitral award? Anyone? What is the meaning of arbitral award? Anyone? basically, okay, so arbitration is a form of out of court settlement. So what happens is there is one person who decides a decision between two parties, A and B. So they, whatever decision that they decide, whatever decision that this person, this intermediary, suppose there's an intermediary C who makes a decision between two disputing parties, A and B. So you don't have to go directly to the court, but there's a person who's called an arbitrator. So he's a middleman, or you can say an intermediator or an arbitrator. So a decision related to the dispute between A and B, that is resolved by this person, and the decision that is provided by this arbitrator is called arbitral award. Okay, so this is basically a final decision which has been provided by this intermediator. Okay, but now this arbitral award, it can be challenged. So suppose one of these parties is not happy, so they can challenge it again. So this Vivad se Vishwas II is for those disputes which are challenged in court. So if you're not happy with this arbitral award, you can then challenge it in the court. So before you have an out of court settlement, but when you're not happy and you're not satisfied, then you move to the court. So these arbitral awards which are challenged in the court, this scheme is for that. Okay, so I hope arbitral award is clear. Arbitration as a form of settlement is clear. Yes, Sunil, correct. All of you are correct. Okay, so Vivad se Vishwas II, it is going to provide a platform for resolving these contractual disputes efficiently, promptly. So it is going to promote ease of doing business. Okay, then it will be implemented again through this online portal called GEM portal. Okay, so it will cover disputes which are related to government, central government agencies, including autonomous bodies, financial institutions, central public sector firms, union territories, and national entity of Delhi. All these agencies, we've already seen this in Vivad se Vishwas Scheme 1 also. Okay, so organizations such as metro corporations, where the center holds 50% stake, they can choose to opt out from this scheme. Okay, so all the metro corporations, all those organizations, all those companies wherein the government has a 50% stake, they can opt out from this scheme. So this is an exemption over here. Okay, so for cases involving court awards, the settlement amount which is offered to the contractor will be up to 85% of the net amount awarded or upheld by the court, while the same threshold will be up to 65% of the net amount in case of arbitral awards. So what do you mean by this? Anyone who wants to explain this, what do you understand by this settlement? GEM, okay, so someone is saying, please repeat the GEM portal. So government e-marketplace portal, what happens in this portal? This is an online portal. So in this portal, what is the government going to do, or any department? Suppose there is there is a finance department or any department, say department A. Suppose they want some goods and services, they want some chairs, tables, or any kind of, for example, they want goods and services from private companies. So what they're going to do, they're going to bring in a tender, they're going to release a tender that we want this, please bring your quotations to us. So in this online portal only, what are the companies, what are the private companies going to do? They are going to bid, they're going to provide their quotations, and whichever private company is going to give the lowest amount, is going to procure at the lowest amount the government, that is going to get the tender, that is going to get the contract. Is it clear now? Is it clear, government e-marketplace? Is it clear? Whoever asked me, please give me your name. KOUST. Is it clear now? Is government e-marketplace clear, or should I repeat it? Yes, Prem, I'll just repeat it. So what is the settlement amount? So now when we are trying to solve a dispute, that means we are some decision has already been taken, but there is still a dispute. That is why that is being challenged in court. So how is the settlement amount going to take place? So if it is a court award, if the court has awarded, then in that case 85% of the net amount will be awarded or upheld by the court. And if an arbitral award was provided, in that case 65% of the net amount will be given after settlement. Yes, so it is a portal in which the private companies can apply. If there is any need from the government. So the government is going to bring in their needs. The government is going to in return say that we want this is what is needed by us. This is what is needed by us. And the companies, whatever companies can supply, they're going to give their own quotations. They write that this is the amount that we are going to charge, and the lowest bidder, the company which provides the lowest amount, that company will be selected, and that company will be procuring it for the government. Is it clear now? Sunil, you are saying, ma'am, I read somewhere that income tax extended date 31 December 2024 to 31st January 2025. Related to what? Related to what, Sunil? Yes, PSUs are so public sector undertaking is a government department. Public sector undertaking is a government department. So when a public sector undertaking wants to procure from any private, that is going to be eligible. So a public sector is going to take from a public sector enterprise or a public sector department that is going to procure from the private sector. So it is between the government and the private sector. Is it clear now? So that is Prem, that is the settlement amount. That is the settlement amount. If there is a dispute, that means the dispute is related to money. The dispute is related to money, right, Prem? So that amount, the settlement amount will be 85% or 65%. Okay? Okay, Prem? That settlement amount. So, Sona, have you answered Sunil's question? Or are you telling me that it is related to Vivad Se Vishwas scheme? What are you saying? I'm not able to understand. I didn't get your question. So, Prem, is it clear now? The amount that has to be settled, whoever has to give. So, out of two parties, one person has to give that money, and one person has to take that money from the other person. So, that settlement, that settlement amount is being talked about over here. Okay, Prem. Please let me know in the comment section if it's clear. Okay, Sunil, clear? Okay then. So the last scheme for today, it is your emergency credit line guarantee scheme, which is your ECLGS scheme. So emergency credit line guarantee scheme. Okay. Now, this was launched in 2020 by Ministry of Finance. Okay. So in 2020 it was launched. Remember the year 2020. This is again for the MSME sector. So this is to support MSMEs and businesses by providing financial aid to. So this was also for MSMEs due to COVID-19 disruptions. So any kind of operational challenge that these MSMEs faced, for the operations of the micro, small, medium enterprises, for that financial aid has to be provided through this emergency credit line guarantee scheme. So this scheme offered 100% guarantee to these lenders, ensuring they wouldn't incur losses in case borrowers couldn't repay the credit guaranteed emergency credit line. So now what happened was, due to the COVID-19 pandemic, we knew that many MSMEs had a downfall. Many MSMEs were also closed because of that. So what was happening is that the lenders, any financial institutions, we're talking about the lenders who are any financial institutions, they were hesitant to lend to these MSMEs. That is why they were not providing loans to these MSMEs, which was hindering their development. So what happened is we brought in this emergency credit line guarantee scheme. We brought in this scheme and in this case what happens is we provide a guarantee to the lenders. We provide a guarantee under this scheme to the lenders that if in case the MSMEs are not able to give back the loan to the lenders, in that case we take a guarantee that if in case of failure of repayment, you don't need to worry, we are going to give that amount to you, we are going to provide that much amount fund to the lenders. Okay, so is this clear? So the lenders, they were not lending, the financial institutions, they were not lending to MSMEs. So this scheme came in, emergency credit line guarantee scheme, wherein guarantee was provided to the lenders that if in case these borrowers do not repay the amount, then you don't need to worry, we will give the money to you. So this tenure was till 2023. Is this basic thing clear? Is this basic thing clear that guarantee has to provided to whom? Guarantee is provided to whom? Is this clear? So it is basically from 2020 to 2023. Guarantee is provided to the lenders. Guarantee is provided to the financial institution which has to lend to these to the MSMEs. So for them, the guarantee has been provided. So that the NPAs are not high for banks, so that these non-performing assets do not increase. So in that case, guarantee will be provided. So that they do not have NPAs, so that the lenders do not have NPAs. That is why they were not lending. That is why they were not lending to MSMEs. So now they will be lending to the MSMEs because now they have had a guarantee. Okay, so it is going to be 100% credit guarantee. So 100% amount will be repaid if in case the MSMEs default in their payment. Okay, so the guarantee limit, it has been increased from 4.5 lakh crore to 5 lakh crore with an extra of rupees 50,000 crore, which is allocated exclusively for hospitality related sectors, civil aviation, to support for their recovery. So 100% guarantee, and how much amount? Till 4.5 lakh crore of amount, or which has been extended to 5 lakh crore. So if you are providing, so this much guarantee cover is provided of 5 lakh crore. So up to 5 lakh crore of guarantee has been provided under this ECLGS scheme to the lenders. So this was implemented in phases. So in 2020, it was on 29th February 2020, we can see this ECLGS 1.0. So it covered MSME units, business enterprises, mudra borrowers, individual loans for business purposes, with loans outstanding up to 50 crore and up to 60 days past due as of 29th February 2020. So this was covered for MSME units, some business enterprises. So if they had an outstanding loan of up to 50 crore, so this 1.0 was still 50 crore outstanding. If that loan is outstanding up to 50 crore, it is for those kind of businesses. Then this is this ECLGS 2.0, which included borrowers from 26 stressed sectors, which are identified by this Kamath committee and the healthcare sector. So this committee which was set up. So 26 stressed sectors have been included. Borrowers from these 26 stressed sectors, if they have an outstanding loan of above rupees 50 crore and up to rupees 500 crore. So this is for 50 crore to 500 crore. So in that case is your ECLGS 2.0. This was up to 50 crore, outstanding loan up to 50 crore. So this much amount of credit guarantee had been provided. So this was the eligibility criteria, that if you have outstanding loans up to 50 crore, then this 1.0 ECLGS 1.0 was the first phase was only for those MSMEs whose credit was whose outstanding credit was up to 50 crore. So for these kind of MSMEs who had outstanding loans, for them guarantee had been taken up. Then in the second phase, for those MSMEs or for those stressed sectors who had outstanding loan between 50 to 500 crore, for them then guarantee had been taken up. Okay. Then ECLGS 3.0, this had extended support to borrowers in the hospitality, travel, leisure, sporting, civil aviation sectors. Then 4.0 was talking about existing hospitals, nursing homes, clinics, medical colleges, units engaged in manufacturing essential medical supplies. So this is how through in phases in different units related to different sectors like business enterprises or health sector or mudra borrowers, etc. So identifying these, and depending upon the loan amount, depending upon the outstanding amount, then in phases this credit guarantee had been provided. Is this clear? Are these phases clear? 50 crore, 50. So ECLGS, the first, yes, under MSMEs, yes. So limit is in the first two phases frame. In the first phase, it was up to 50 crore. In the second phase, between 50 crore and 500 crore. Yes, nursing home. This is completely for the MSME sector. This is completely for micro, small, medium enterprises which are related to health sector, which are related to the nursing home. And yes, the credit, yes, government. Yes, government. So this is the scheme launched by the government. So that will be covered through this scheme. Fund will be generated, which will be used in case these MSMEs default. So Prem, it is 50 crores, up to 50 crores in the first phase, and in the second phase between 50 to 500 crore. Okay. Next class at what time, Sunil? The class is only right now from 8 to 9 p.m. But yes, tomorrow and day after tomorrow also the schemes related class will be there at 8 p.m. Is it clear? Any doubt now? So one of you is asking that which bank. So any. Uh, yes. I have opened up the previous slide. Now ask, what are you asking? So any lender. We are talking about any lender, any financial institution, any bank. Okay. Please give me your name, KOUST. Just give me your name, please, so that I can call you by your name. I hope it's clear now. Is this clear to you? So this, I'll just repeat it for you. This emergency credit line guarantee scheme is for those. It is for this guarantee is provided to the lenders, that if in case the MSMEs, if in case the micro, small, and medium enterprises do not repay the loan, then we are going to give you a guarantee under this scheme that you will get your money back. So you don't need to worry. This is the crux of this scheme. So 100% guarantee will be provided. 100% guarantee. Okay. And it has been implemented in phases. And in this phases, how it is implemented? Okay, Kaustav Das. Okay. Kaustav, so this has been implemented in phases. So in phases, certain sectors which are related to certain MSMEs which are related to different sectors. For example, initially in the first phase, it covered business enterprises, mudra borrowers, individual loans for business purposes. In phase two, healthcare sector was included. Stressed sectors were included. Basically, 26 stressed sectors were included. Then in the third scheme, borrowers in the hospitality, travel and tourism, leisure, sporting. So all MSMEs involved in these sectors like hospitality, travel and tourism, then these kind of people were included. Then in the fourth phase, other existing hospitals, nursing homes, clinics, medical colleges, these all were included. Okay, is it clear now, Kaustav? Is it clear, everyone? So the entire funding which is provided under this, it was backed by 100% credit guarantee from the National Credit Guarantee Trustee Company Limited. So this has been formed. So I think Kaustav asked that who is providing that guarantee. Then this National Credit Guarantee Trustee Company Limited. This company, this is that company which is going to provide. This is the company, National Credit Guarantee Trustee Company Limited, that is going to provide 100% guarantee. And what is the tenure of this scheme? It is 4 years. 4 years is the tenure of this scheme. Okay. Okay, interest rates under the scheme are capped at 9.25% for banks and financial institutions and 14% for NBFCs. What are NBFCs? What are non-banking financial companies? What are non-banking financial companies? Who's going to tell me? What are non-banking financial companies? And I hope, Costa, this is clear that who is going to provide that guarantee? National Credit Guarantee Trustee Company Limited is going to provide that guarantee through this emergency credit line guarantee scheme. Okay, so what is an NBFC? So NBFC is a non-banking financial company. We are going to do the provisions or the features of this, in one of the classes. But NBFCs, they are not bank. They do not have a banking license. They do not have a banking license, but it is a financial institution. It is a financial institution which does not have a banking license. There are certain features which are different from a bank. For example, they do not accept deposits. So there are many differences. Okay, so it is a financial institution. It is under the Companies Act. It is a financial institution but does not have a banking license. So interest rates for normal banks and financial institutions which will be provided under this scheme is 9.25% and for NBFCs is 14%. Is this clear? Is this clear? Any doubt in this scheme? So just remember the basic terms, don't need to go in that much detail. So yes, Sona is saying that performs all banking functions except accepting demand deposits. Okay, so there are other different differences also related to your if CRR is to be kept or not. So there are many differences. We are going to do it in one of the classes. Okay, so cooperative banks, housing finance companies. So there are so cooperative banks is a bank. Cooperative is a type of bank. It does not come under your NBFC. NBFCs are companies. Cooperative banks is a very different concept. That also we are going to do in class. And I've also taken up a YouTube session related to cooperative banks, so you can go through that as well. In detail, we have discussed about cooperative banks. Okay, Kaustav. So cooperative bank, there are two types of banks. You can say commercial banks and cooperative banks. So cooperative banks is something else. And non-banking financial company is something else. The word company is there in an NBFC. Okay. So these small terms, it should be clear to you. So you can say some provisions are not, some provisions of the RBI are not applicable to NBFCs. Absolutely correct. For example, CRR or SLR, that is not to be kept. That is not to be kept by the NBFCs. They don't need to keep it with the RBI. So is this clear? Are all these schemes clear to you all? Emergency Credit Line Guarantee Scheme, Vivad Se Vishwas I and II. Then there's the National Pension System, then Sovereign Gold Bond Scheme, then Pradhan Mantri Suraksha Bima Yojana, Jeevan Jyoti Bima Yojana. So I hope the schemes are clear. Once you read them on your own, things are going to be clear. So just revise it. Learn it. Tomorrow we are going to meet up with the other schemes also. So just give me a thumbs up, everyone. Sona is saying it's clear. All others who are watching the video, kindly let me know if these things are clear. Sunil is also saying clear. What about Kaustav? Who else? Prem. Sheikh, Himanshu. What about others? Clear? If there's any doubt, you can ask me right now in the comment section. Otherwise, after the class ends, you can just download this PDF. I'm going to add this PDF. You can download that PDF, read on your own. If there's any doubt, you can ask me in the next session also. Okay? So that's it for today from my side. Tomorrow we are going to meet up at the same time, 8 p.m. and we're going to cover the other important schemes which are part of Ministry of Finance. Okay, and please after the class, don't forget to provide a rating. Yes, Kaustav. So this is just a prediction that most likely the sovereign gold bond scheme, it will be discontinued. So it will be discontinued. So the scheme might be discontinued. We might not continue with this scheme maybe in a year or two. Okay, Kaustav. So after the class ends, I request all of you to kindly give the rating, to kindly please give your feedback. If there's anything that you want to write, whatever feedback you want to give, kindly give it at the end of the class. Okay, Sunil, thank you very much. Kaustav, is it clear? So no, sovereign gold bond scheme, it was not launched in 2025. This scheme had been launched in 2015. It is continuing till now, but there are discussions that this scheme might be discontinued. That this scheme might be discontinued in future. Why? Because this is creating a huge burden. This is creating a huge burden on the government. A lot of interest is provided, and like I said, that it is sovereign. That means it is backed by the government. That means the government cannot fail to give. Okay, so the government has to provide that money back. That is why it is creating a lot of burden on the government, and that is the reason why this sovereign gold bond scheme might discontinue. So you can read it on the internet. Just search that will the sovereign gold bond scheme be discontinued, and just read about it. Okay, Costa. Okay, 10 on 10. Okay. So this way we are going to cover, all the schemes under the ministry. We are going to understand the schemes in detail, and we are going to try and learn it in the class only. Okay. So just give me a thumbs up if it's clear, Costa. You're welcome, Sona. Okay, then we'll end the session here. Thank you so much. Good night to all of you. Keep studying and all the best.